Welcome to the Contrarian Capitalist. Delighted, if I can get my words out properly, I'm delighted to be joined today by John Rubino. John's a former Wall Street financial analyst, an acclaimed author, and a well-rounded student of history. If you're looking to learn about markets and to understand all things to do with finance, then I do highly recommend you go and check out John Rubino's Substack. I'll put all links into the notes that come with this podcast. That being said, John, welcome to the Contrarian Capitalist.
Hey, Rob. It's good to meet you. Thanks for having me on.
Really looking forward to this, and I thought maybe the best place to start. There's a lot going on that we were just discussing off air, so we might dive into politics, UK, USA, etc. But before that, I thought the best place to start would be to have a look at what's been going on in some of the mining stocks. Obviously, Q1 earnings 2025, most if not all of them are out. Uh, Big companies like Newmont, Agnico Eagle, really good results on paper. But I know you've written a couple of articles recently about some mining stocks and mergers and acquisitions that have caught your eye. So the floor's all yours. What have you seen? Is there anything in particular that's stood out to you with those results?
Okay, well, gold in particular has had a massive bull market in the past year. It's up almost 50% in a little over 12 months. And you would normally think that that would just light a fire under the mining stocks, right? Because they're normally a lot more volatile than the metal itself. There's a saying about gold miners that they're leveraged plays on the underlying metal. And so you would expect the gold mining business just to be booming right now, especially in terms of stock prices. And for the longest time, that didn't happen. Gold went up and the miners just kind of churned, and gold went up some more and the miners just sat there. And a big part of the reason for that was that the cost of mining was going up at the same time that gold's price was going up. And so that negated the benefits of a higher sale price for gold because your costs ate the what would have been profit otherwise up if you're a miner. And so the miners didn't really rock like they should have. But lately, gold has gone up enough to swamp the cost increases in the mining business. So the miners are reporting really good numbers now. The fourth quarter and the first quarter, the previous two quarterly reports have been excellent for the mining industry. They're seeing big revenue jumps because gold is up. And a lot of that increased revenue is working its way down to earnings. And when cash flow is up and the share price is up and everything for a miner is that they start doing good things with that cash flow. They raise their dividends, they pay off their debt, and then they go out and start making acquisitions. And we're just seeing that get going right now. I think it was just yesterday that Pan American Silver bought out Mag Silver for I think it was 2 trillion or $2 billion. Okay, so it was a mid-tier being bought out by a major for a nice premium over the recent trading price of the stock. And that's the kind of thing that gets investors excited and causes them to start looking around for who's next. And within the precious metal space, there's an awful lot of potential takeover candidates because there's a lot of smaller producers and definitely a lot of explorers who really haven't gone up that much. They're still very cheap in terms of gold in the ground and silver in the ground. And so you would expect the big miners to start buying those guys out pretty soon. And you would expect their prices to be going up in anticipation. So in some cases, that's happening. So we'll see how it goes. But I think we're at the early stages, assuming gold holds up. If we have a brutal correction that takes it back down to $2,200 an ounce or whatever, that'll put a hold on all of this. But if gold stays in the $3,000 an ounce range, we should see a massive increase in M&A in the mining sector going forward. And, that's what gold bug mining stock investors have been waiting for a long time. So, my response to that possibility is that it's about time, should have happened years ago. And while we were sitting on those lifeless gold mining stocks, while Bitcoin was soaring and Nvidia stock was soaring, the mining investors have left a lot of money on the table in the past few years by missing out on some of the big bubble runs in other sectors.
Mhm.
So if we start to get something like that in mining, it's just, it's time. We've earned it by waiting all this time.
Yes, patience is a virtue, as I've often been reminded throughout my lifetime. Looking at some of the numbers, John, and I read different things on the internet, but I see that a lot of like analysis for gold mining companies is based on a theory. I use that term loosely, that the gold price is between $1,800 and $2,000. So the fact that we're talking today and it's circling 3,300, then that's quite a big difference there. This is probably also why we have seen quite a lot of healthy results from quarter four in 2024 and quarter one in 2025.
Yeah, a lot of the mines that are out there now got greenlit on the assumption of a much lower gold price. They were designed to be profitable at, like you said, $1,800 an ounce gold. So for gold to go up by another $1,200 an ounce, that means, assuming costs stay the same, which they haven't, they're up some, but still, the average miner is making, $500 to $1,000 more per ounce than they predicted that they would 2 years ago. So this makes mining a very healthy business right now in precious metals. And it's one of the few healthy businesses out there. You look at retailing or finance and in a lot of other sectors, and you don't see anything like 50 to 75% gains in earnings per share year over year, which is what the miners are putting up right now. So people who don't even understand or care about mining are seeing these results show up on their screens for earnings momentum or rising cash flow or whatever momentum investors like to see. They're seeing it in the mining sector right now. So that implies that generalist money is going to start moving into precious metals mining and maybe pouring in. We'll have to see, but there is so much more generalist capital out there than there is mining specific capital. The gold mining and silver mining industries are just tiny compared to the amount of cash that's out there. And if it starts to move in to a sector that's that small and that thinly traded, we could see some really discontinuous action out there where stocks just gap up. And then the M&A starts to keep pace with the gapping up of the big stock prices. So things get very exciting very fast in the mining sector. And I think what would make that happen is one more quarter of phenomenal earnings. So you'd have the fourth quarter, then the first quarter, then the second quarter. And I think that's highly likely because we're what are we now, halfway through the second quarter? We're
Mhm.
April, yeah, okay. And the price of gold on average has been higher so far in this quarter than it was in the first quarter. That means we should see widening profit margins again and rising cash flow. So 3 quarters in a row is enough to get the attention of people who look for momentum rather than for specific industries. And like I said, there's a lot of them out there and they have a lot of money. So give us one more good quarter and things should get very exciting in the precious metals mining sector.
I totally agree, and it's important to caveat what you said a few minutes ago about that if there is a very strong recession, etc., then that could have a massive impact on gold, the gold price, which could then, it could then dip down quite significantly. But in my opinion, once you dip down to whatever level it might be, call it 2,200, as you mentioned, then from there it should be because of inflation and currency printed, etc. We should then be off to the races. So it's interesting to see these dynamics play out. I just find it absolutely fascinating.
Yeah, a very reasonable scenario right now would be for there to be a correction in precious metals brought about by a recession and an equities bear market, all the kinds of things that are overdue now. And for that to happen, for instance, back in 2008, that happened, and gold went down by about 20%. Well, 20% of $3,400 an ounce is a pretty big number. That takes us down into well into the 2000s. And that could easily happen. Bull markets don't go on forever in the same direction. They have lots of corrections and periods of consolidation and stuff like that. So there's no reason to think that we couldn't have another correction going forward. But as you said, if that happened, if we get the recession, the equities bear market, and that affects gold and silver, then the pressure on central banks around the world to ease really aggressively is going to be irresistible. So we'll see massively easy money pouring into the system. In other words, the central banks of the world will start buying up bonds with newly created currency, dumping that currency into the market and trying to reliquify it. And they'll be pushing interest rates back down. So we could easily, a year from now, be back down to negative interest rates in a lot of places. And if all of that happened, then you would see gold and the gold miners take a big hit during the first part of it and then just go to the moon afterwards. Because if we get another environment with low to negative interest rates, everybody knows what to do then. We just had that. We saw what happened, and everybody's going to front run that process by buying precious metals. So you could easily see gold have another big run after that and get up into the $3,000, $4,000, $5,000 range, and take the miners along with them. So now, if you're an investor, how do you deal with that? The possibility of a big correction and then a to the moon bull market run after that. And the way you deal with that is basically the way you deal with anything. If you're not a professional investor, don't jump in with both feet on any kind of an assumption about what's going to happen, because you're probably wrong about the next 6 months. So use low ball bids. In other words, put really low prices in, and bid for some of the stocks that you like. And see if there's a big correction, maybe you'll get some of those super low prices. And use dollar cost averaging, which is where you put the same amount of money each month into something that you like. And then when that goes down, you buy more of it because your dollars go further. And when it goes up, you buy less because it's more expensive and you get fewer ounces, let's say, for the same amount of dollars. And over time, your average price works out nicely. So do those things. Don't worry about the squiggles and you'll be okay. And remember, nobody, even professional investors, they claim they can time markets and stuff like that, but almost nobody can do that. That the smartest, best investors in the world don't even attempt to try to time markets normally. They just buy bargains. That's what, for instance, Warren Buffett does.
Mm-hmm.
He buys shares in businesses that he thinks are well protected by intellectual property or business model or whatever, and that therefore have a long period of growth ahead of them. He buys those stocks and he just lets them run. And then when he can't find any more bargains, he starts building up cash. And that is what he's doing now. Warren Buffett holds the biggest amount of cash he's ever held. He's got something like 5% of the entire treasury paper market. So that's his cash analog. So he's just buying government paper right now. But he's not timing the market. He's just recognizing that he can't find any more bargains out there because the stuff he likes has gotten too expensive. So think in those terms. Buy things that are at a bargain price. And if gold goes down, you're throwing, and your dollar cost averaging, you're throwing the same amount of money at the market and getting more ounces. So approach it that way, and you'll be able to sleep better at night than if you're trying to time the market and you're catastrophically wrong, which you will be eventually if you try to bet on market moves.
I also think what helps with that analysis, and it's very prudent information there. Thank you for sharing that. I also think that if you study enough of financial history, monetary history, etc., and you've seen roughly what's happened before, and we've just discussed what potentially is going to happen again, then the impact that's going to have on gold, for example, is that the gold price or the devaluation of the currency, whatever way you want to look at it, that's going to send the price of gold sky high. So, as we said at the start, a lot of mining companies, their analysis is based on $1,800 gold. Well, if gold goes to 5 or 6,000, yes, of course, labor would have increased, etc., etc. But ultimately, if you believe that that's the direction it's going to take in the future, then again, doing doing dollar cost averaging, for example, you're probably going to end up winning one way or another. I mean, that's the way that I would look at it for from a novice point of view, so to speak.
Yeah. You would end up winning one way or another with something that's definitely going up. But psychologically, if you if you make your big bet right now, you're looking at that $10,000 an ounce target way out in the future, and you make that the big bet now, but gold goes down by 50%. Can you handle that psychologically? And that's the thing that, because a lot of people have a little bit of early success in investing and then they think they know what they're doing and they make a big bet and then that big bet turns sour and they just get out of the whole concept of investing. They just start putting money in a bank account and don't think about it beyond that because they realize that they don't know what they're doing. And one of the really important conclusions I think that a lot of professional investors come to is that they don't know what they're doing either. They don't know how to time markets, so they stay in the business, but they learn to be much wiser in their investing, and that's usually looking for super high quality assets and buying them a little bit at a time on corrections. So I think that's a much safer way for people who are listening right now to approach this market. Yeah, gold is probably going to go through the roof over time, but it's
Mm.
also going to have corrections that will chase out weak hands. In other words, people who aren't completely sure about their conclusions about where the world is going will get knocked out of this market, and they'll end up losing rather than winning, even though they had that $10,000 number right. They just they didn't plan for the ups and downs along the way. So plan for those ups and downs, and you'll be a lot happier with how the process goes.
Again, I think very prudent information. So thank you for sharing that. Just going back to mining companies, and again, appreciate if we mention any names here. This is not financial advice or financial recommendations. Just having a chat about what we've seen in the markets. A lot of results to go through, but if you can, have there been one or two standout results or one or two companies that you think maybe are a little bit under the radar that people aren't paying attention to from your analysis, John?
Well, there are some. See, I don't want to name risky names because even like there is one. I'll name the name, but I'll name it with a caveat. There is
Mhm.
a explorer called Snowline Gold that has had a beautiful run over the past year, from below $1 to like $5 and change right now. So it's a five bagger, and it's drilling in the Yukon and coming up with massively positive drill results, and it's big enough now that it looks like it's a legit takeover candidate based on the current work that it's done. Um, and people are continuing to buy it. It doesn't seem to be affected by squiggles in the market. It just goes up a little, each month, and so it looks like a sure thing. And maybe it is, uh, but if you're looking for the snow line below $1, in the um, explorers market, instead of after it's already gone up five times, you're looking at extremely risky little companies. And as Rick Rule, one of the big names in this space, likes to say, as a group, the explorers, the little gold miners and silver miners, generate capital of or generate profit of negative billions of dollars each year. In other words, most of them lose everything, and a handful of them end up making a lot of money. So unless you're capable of separating the wheat from the chaff when they're in that snow line at 97 cents a share phase of their existence, then you need to be very careful with aggressive investing in the precious metals sector. So I would say look at the quality names to begin with. If you're new to the sector, buy the ones that have the highest market cap, and and focus on them to begin with because they'll benefit from the price of gold going up. And then look at there's a category of gold and silver miners called royalty slash streamers. And basically, what they do is they finance those little mines that we're talking about with the explorers out there, and they build a big portfolio of investments that are contractually obligated to pay them part of the eventual production of those mines. And so they're not at risk from the vagaries of any one mining operation. And but they benefit greatly from the price of gold and silver going up. So the big high quality royalty streaming companies are good things to invest in now. They're less risky than any individual miner, but they profit from the same process that the big miners do. And in my Substack newsletter, I've got a sub portfolio of the royalty streamers, and so far so good. They're all but one are up since I listed them. And then another way to approach this is the ETFs, the mutual funds that specialize in the mining stocks, and they're all up too. I have a set of those that every single one of them is up. So between the royalty streamers and the precious metals ETFs, all but one of them are up since I've added them to that portfolio. And anybody who's investing in them is basically pretty happy. Maybe they're not as up as much as Snowline Gold, but they are up 50 to 75%, most of them, in the past year or so. And that's a good year, with other good years in the future if everything goes the way it seems like it might go. So there are lots of ways, in other words, to invest in precious metals mining without taking big chances, but still giving yourself a pretty good shot at doubling your money or quadrupling your money over the next few years.
You mentioned Rick Rule, and I believe I'll probably butcher this quote, but I believe he also said something along the lines of everyone has got the ability to at least make $1 million or $2 million in the next gold boom phase through miners. Now, as we said, always do your own homework, always do what works for you. But it's good that if you follow the advice that you've said, dollar cost averaging, and you've obviously mentioned a company there, and then other things that you can do. And if you have the belief of where you think gold's going to go, which again, looking at history and looking at what's likely to happen financially moving forwards, then I would say, you're not guaranteed success, but the chances are you're more than likely going to have some level of success moving forwards in this particular industry.
Well, yeah, and Rick Rule is a billionaire, so when he says
Mm.
everybody, he's referring to people who have some capital to start with. And if you've got several $100,000, you definitely have a chance of making 1 million or 2 million in this space. So you need to start out with, well, you need to keep your expectations in line with your starting capital, and you can make 2 or 3 times your money with not excessive risk in this
Mm.
space right now. But if you're stretching for more than that, then you necessarily have to take on some risk, and you need some understanding of what you're doing before you take that risk on. So, um, you know, being careful is the absolute most crucial thing you want to bring with you into this. You want to be cautious because nothing is guaranteed in life. No market is perfectly predictable, and certainly no emerging stocks within a highly volatile market are easily predictable. So be careful, be cautious, dollar cost average, and you have a very good chance of being happy with what you've done 5 years out.
One thing that could happen, or a couple of things that could happen that sometimes we just don't know, are black swan events. And I know you've recently had a chat with Dr. Naomi Prince over at Prince Sites about this, and you've also written about this recently. If you can go into that article a bit more in depth, what potential black swans have you been writing about? What do you think could happen moving forwards with them?
Yeah, there. In addition to the normal market risks, in other words, a recession, causes an equities bear market, stuff like that. That's always with you. But there are a lot of things going on out there right now that qualify as black swans. In other words, extremely unlikely events that happen. And one of them is this whole AI thing. A lot of people in the artificial intelligence space believe that we're on the verge of creating artificial general intelligence, which is to say, a machine that can think and improve itself. And, in other words, rewrite its code according to its experiences. And once that starts, where does it end? Does it end with something that is just so powerful that whoever has the newest version of it rules the world? And that's something that a lot of people in the space are worried about. For instance, which country, is it China or the US or somebody else, that's going to come up with the first true AGI system? And is that system going to be able to basically break any encryption? Or is it going to be able to create media that is indistinguishable from absolutely true media? And is it going to be able to control the public perception of what's going on in the world in ways that nobody can do now? And will it control the world if it controls the world's media? Stuff like that is out there, very possibly in the next 5 years, let's say. And what does that do to markets and investing when it happens? It's very unpredictable. So something like that would qualify as a black swan that changes everything we just talked about. All the stuff that we thought was going to happen. Maybe this new thing comes along that kind of throws all of our assumptions out the window. And then, you can put war in sort of the gray swan category because it's not out of the blue. But if we get into a shooting war with Russia or China, and we wake up one day and we're in World War III, that also will change all of our assumptions or invalidate most of our assumptions. So there's a lot of stuff going on out there. A lot of it is technological, and a lot of it is geopolitical stupidity. We're always capable of it, but with today's weapons, a shooting war is not anything like what we've seen in the past. And I have a piece coming up. I haven't posted it yet, but it's going to be Black Swan, what if the US loses a naval battle with China? And what would that do to the global financial markets? If we go over there in the South China Sea and try to impose our will, and China sinks a couple of our aircraft carriers, and then we have to slink home. And then, so all of a sudden, what's the dollar like in that kind of a situation, and the euro? And nobody knows what that world would be like. But it's completely possible because warfare is changing so dramatically. For instance, China is, instead of trying to go toe to toe with US aircraft carriers, it's deploying a bunch of smaller ships that have missiles capable of hurting bigger ships. So it's sort of like a drone swarm in the air, but this is on water. And how do modern battleships and cruisers and aircraft carriers deal with something like that, like a drone swarm on the ocean with missiles that are literally capable of sinking some of those bigger ships? And it's not clear. So stuff like that could happen we could wake up any morning and that could be in progress. And so you have to be careful when you're investing to understand that nothing is a sure thing, and that even if you're capable of predicting where markets are going to go in normal times, you don't have these black swans accounted for. And there's so much more, cyber attacks, EMP attacks, another pandemic, all of that stuff is totally possible, and all of it would change our investment assumptions in a heartbeat. Excuse me. So we should approach this with humility. In other words, we cannot predict the future in any meaningful way. And when we invest, we have to leave out a lot of these extreme fat tail possibilities and make assumptions within the realm of the probable. And you can do that and have a pretty good chance of being right and of making money and of doing very well over a long period of time. But you got to recognize that wild things can happen. And it's reasonable to assume that if you've got 10 wild things, 10 black swans that are conceivable, the odds become fairly reasonable that one of them is actually going to happen. Even if every one of them is a 2% probability, and you've got a bunch of them, then there's a decent chance that one of them happens, and that can change everything. So that's another thing you've got to keep in mind when you're investing, that crazy stuff can happen. And see, that's one of the parts of the gold and silver story
Mm.
that I think a lot of people begin with. You know, a lot of stackers and preppers began with the assumption that there was going to be some kind of civilization threatening event out there, and they were looking for ways to protect themselves. And they concluded that gold and silver, at being the money that has worked for 3,000 years, will continue to work as a store of value and a medium of exchange. And so they started stacking, and I think that's one of the things that, if it hasn't yet, should lead people to the precious metal sector, because those things are probably protection against most of these black swans that we're talking about. And you start with the physical. Obviously, you want gold and silver coins and bars that you have control over in some way, and then from there you branch out into those mining stocks that we talked about. And again, gold and silver are money that will protect your purchasing power over time. They won't make you necessarily rich. They won't be a way to build capital, but they're definitely a way to protect capital. And so the people who have been stacking all this time, especially the ones who focused on gold more than silver, are very happy right now. The gold bugs of the world are they're still waiting for that giant win, but they're very happy with the way the last couple of decades have gone.
Yeah, and if we just go back to the two main black swans that you mentioned of AGI, I just always assume that China's so far ahead in those things anyway. All we've got to do is look at their nuclear technology and thorium plants, for example, and they're so far ahead. So for that to happen, I wouldn't rule that out. It's plausible. And then you mentioned about the other piece you've got coming out. I was just having a quick look at Google Maps a minute. You mentioned about the South China Sea, looking at the geography there, and again, absolutely fascinating. It's plausible. I mean, yeah, if there is a a hot war, World War III, for example, again, things that I'm sure we would sit here and say, we don't want to happen. Obviously, we don't want that to happen. But if we're looking at the chances of it happening, then we should never rule it out. So I do think those black swans could throw a massive spanner in the works. And I'm glad you then led on to gold and silver, because I was going to ask about that. They've stood the test of time, and I think it's fair to say they'll continue to do so moving forward.
Yeah. When you're thinking about money and investing, all roads eventually lead to gold and silver. It turns out to be one of the things that you should have some of, and how much depends on your attitude about the other things we talked about. How crazy is the world going to get? How quickly are the world's fiat currencies going to collapse? Because they're trending in that direction now, but will they last another 50 years, or will the next couple of years be the monetary reset? So your opinions about that dictate how big a role gold and silver should play in your financial life. And in my case, they play a really big role because I'm very gloom and doomy about the fiat currencies. I think they're so badly mismanaged that they're entering their doom loop right now, where the interest on government debts in a lot of countries has spiked parabolically. And then that interest has to be borrowed going forward, which raises the deficit even further going forward. And that leads to a death spiral for these currencies. I think the dollar and the euro and the yen are all kind of sort of in that place. And that leads me to be really precious metals oriented in my investing. But if you think the fiat currencies and government finances in general will last another 20 years, then it's easy to look at tech stocks or finance stocks and things like that, and think, all right, I've got plenty of time to capitalize on the growth of these new industries. And you might be right. I've been way more pessimistic about the dollar and the euro and the yen over the past really couple of decades than I needed to be. And they didn't collapse or anything. They're still here. We still somehow managed to buy ourselves another 10 years or 15 years after the Great Recession. But we did that at the cost of massive amounts of new debt. So hope springs eternal for the end of fiat currencies in my mind. But yeah, there are lots of different ways to approach this, but gold and silver generally play a role now in a growing number of portfolios, and that'll continue until the end of the whole fiat currency experiment.
Which, as you've just said, could go on for a lot longer because they seem to, central banks, Federal Reserve, whoever, seem to have this uncanny ability of just getting that game to just go a little bit longer year by year. I continue to be amazed at how they can continue to drag it out. But that's the importance of doing podcasts like this, is to alert people to what's going on. Most, some people listening already are going to be well attuned to what's going on. Some people might have no idea. So it's always a pleasure to be able to do these podcasts and speak to people like yourself, John, who've got so many years of experience with this, and that they're able to sit down and go, well, this has happened before. This is where we're at. This is potentially what could happen. This is what you could do to help yourself moving forward. So, again, it's a pleasure to be able to have these level of conversations and to add value to other people.
Thanks, Rob. I've enjoyed this so far.
Just before we wrap up, is there anything else on the geopolitical stage that we haven't mentioned that you feel that is important that we need to talk about?
Well, weirdly, Europe seems to be the big threat out there right now because the US has pulled back from NATO, and we're no longer supporting the Ukraine proxy war, which is basically a NATO war created by NATO and aimed at weakening Russia and maybe just taking Russia off the game board altogether. And the US has pulled back from that, thank God. But Europe's not. They're ramping up the saber rattling and are trying to find ways to find the money and the weaponry to keep this war going for a while. And when you're fighting a proxy war against a nuclear power, there are always incredible risks that are inherent in what you're doing. And the longer the Ukraine war goes on, and to an extent that they have weapons capable of striking into Russia and killing Russians, then we're risking a nuclear war. So that's a thing. It's less of a thing than it was before Trump got elected. But it's still a real possibility that things spin out of control over there because of Europe, which is to me is really surprising because the U.S. has played such a dominant role in NATO for such a long time that you would think that the U.S. not wanting to fight a war would lead the Europeans to agree and to pull back, but it's the opposite. They're ramping things up. So I have trouble explaining that and hate to see it, and hope that it ends soon, but who knows?
I think from a European perspective, as you highlighted before we started talking, my accent is from the UK, so technically not part of Europe, but that's a whole different story. That's a whole different podcast. Yes, it's fascinating to see that because of really Europe, what the EU was doing doesn't make sense unless they know that they're in such a massive financial hole that the only way to get out of that is to properly ignite a hot war, which sounds incredibly cynical, but this is the sort of thing that's happened before, and it wouldn't surprise me if it happens again. I hope it doesn't, but it wouldn't surprise me. I don't know if that's a sentiment you'd agree with.
Yeah, that's a pretty good explanation for what's happening because Europe is they've basically destroyed their economies and their political system is a mess. And they're seeing kind of Trumpy MAGA like populist parties rise up, and they're looking for ways to stop that from happening. And they're kind of going authoritarian as it's happening. But that's very unpopular in peacetime. Uh, but maybe if they can engineer a war so that they're existentially threatened, that will give them cover to declare martial law and stamp out this populism that is rising in Germany and in France and over in Britain too. You know, the local elections in the UK were shocking to a lot of people this last time around. And if you nationalized that voting pattern, Nigel Farage would be the prime minister of the UK, and that's astounding. You know, for even 6 months ago, it was inconceivable. So yeah, it's possible that governments in Europe are doing what governments frequently do when they mismanage their economies, is they look for an evil enemy overseas, start some kind of war, and use that as cover to distract their people from their own mismanagement. So yeah, that could be the explanation for Europe, but still seems like a big risk to take for what didn't used to be that warlike a culture.
It does seem like a big risk, and it seems like a very unnecessary one. But as you just alluded to, when you're trying to mask other things, whether it's uh, migration or immigration policies or financial policies that these places have enacted, then what I think watch this space is probably the best way to summarize moving forwards. But those election results in the UK or in England actually, because they were English local elections. I know you've written about it. I'll put a link to that in the post with this podcast as well, because I was writing about it at the same time, and my post will be out in due course. Fascinating to see what happened and the fact that that could be it could possibly be the end of two-party politics for the foreseeable future. Maybe, who knows? But as you said, the next general election is 2029, so a lot can happen between now and then. But it does seem to me that people have started to, dare I say, vote with their feet, which is a good thing, might not be a good thing. I don't know. It depends on your view of the political world. But certainly, I think there are some changes afoot, not just in the UK, but across Europe as well, and probably the globe, to be fair.
Yeah, politics is going to be chaotic for quite a while, and that's what happens when you screw up your financial system. You know, because you screw up your finances, you screw up your politics, and your politics loops back over and starts making finance more chaotic. And that's where we are right now in the world. And I don't really see any pain-free solution to this. We have the gigantic crisis, and then we have to have the resulting currency reset, and we have to hope that all happens without World War III breaking out. So, what a decade we have made for ourselves. It's going to be a wild few years at least.
It is, and hopefully next time we speak and have a chat on the podcast, we will find out what's happened between now and then. John, it's been an absolute pleasure. I think we've covered a wide array of subjects, and there's been a lot of prudent information there that people can act on as well. In order for people to find you and contact you, I would like to give everyone the opportunity. I've got here rubino.substack.com. Where else can people find you, or is Substack the number one place?
That's my place now, rubino.substack.com. And I'm publishing a newsletter that's aimed at actionable advice for the kind of stuff we talked about. In other words, okay, the world is going to do this, this, and this. How do we prepare for it? And so far, so good.
Perfect. As mentioned multiple times, I will put links to that into the show notes that come with the podcast. So if you're listening to this on Apple or iTunes or whatever, or watching this on YouTube, head over to contrariancapitalist.substack.com. All the links that we've spoken about will be in there. John, it's been an absolute pleasure, and look forward to round two at some point, maybe later on in the year or at the start of next year.
Thanks, Rob. Sounds good. Look forward to it.